Now, this is what I want to leave you with. The way you've seen my charts, you have seen the way I keep it very clean, very simple. All I want to do is first find out which direction the market is. It means to say, does the market have a natural tendency to go up or down? Remember, in any kind of markets, there's always a dominant trend. And then there are times there is a counter trend. Sometimes like the US equities, there is no counter trend. It's just one trend, which is the market is going up. That's a dominant trend. So you must be able to define where the parameter in which the fight, the contest between forces representing the buyers and sellers are fighting, because it will move from one parameter to another parameter. That's the reason why I have one box, two box, three box of the same color until it flips. When it flips, that means the trend has changed. So the first job of the trader, I don't care what you trade, you must first know what the market natural tendency is. Does it want to go up or does it want to come down? And you can only find the answer at a higher time frame. You can, of course, do the same thing for the lower time frame, but like I said, the lower the time frame, the noisier it becomes. So the only way to find for direction is to go to the higher time frame. So if your platform doesn't give you enough historical data to do any useful long-term analysis, go and find another platform that allows you to have more data so that you can do more meaningful analysis. Once you have the directional bias, then you know whether you should be buying or selling. If the market have a natural tendency to go up, then obviously you need to buy, right? But doesn't mean that you can buy at any price. So there lies. The next question is, after you know where the natural tendency of the market is heading, and you must decide the next step, where to engage the market, where to enter a position. If you enter the wrong place, then you'll be holding the position for and have to endure the emotional roller coaster, which is going to be so damaging to your psyche. So deciding where to enter has a skill. Market doesn't go up 90 degrees, doesn't come down 90 degrees. Very rarely. Of course, they do happen, but it's very rare. Most of the time, it will go up and down, up and down, up and down, up and down, between a boundary. So you must decide at which part of the boundary. Once the signal comes in, then that signal is the candle bar. If you can understand the relationship between bar to bar in the candlestick, whether it's single bar, 2 bar, 3 bar setup, then you have a tool to see the signal. Once the signal is given, then there's only one thing to do: pull the trigger. Do not blink, pull that trigger. Because when you pull the trigger, then you are in position. Now, before you even pull the trigger, you must understand there is no such thing as guarantee. You can do your best analysis and the trade can still go wrong. And the reason is of no use. Don't blame yourself if you say, I should have waited, I should have done this. No, those doesn't count at all. Once you have decided that you have a signal, ask yourself, what is the worst case scenario? Is where you enter and where you need to be stopped out, is it too far? If it's too far and you still want to engage the market, the only thing you can do is reduce the size. Remember, there is no saying that you must always enter with the same position size. One thing good about trading these days is that they are all fractional pricing, especially CFD products. Even for futures, there are these micro products that allows you to scale in at smaller lot size. Then you can space out your entry, because there is such thing as price being too far away from your stop loss price. Then that trade cannot work. It doesn't work out that way. You can still engage the market. Now, if the market is very close to your stop loss level, then that increases the motivation to do more. That's why I have the dark pink area, the dark green area. If the price goes into those areas, then I want to do full size. And my risk is actually very, very, very low. If I'm wrong, I will know very fast. If I'm right, I know I will get in at a very good price with very good risk-reward ratio payout. Once you know where the stop loss price is, and you must know that before you enter the market, the next thing left to do is where to take profit. Now, unless you take that profit, the profit is not yours. So before you enter, you must already know if the price goes in your favor, at what price must you exit? And the price hit the level, you must take the profit. Of course, price can go beyond the profit-taking price. Yeah, if only I waited a bit longer, I can make more. That's beside the point. You can't make all the money. Take what the market can give you on a reasonable level. So that's all there is to trading. The ability to project price forward so that you can take profit is very valuable. And it's not rocket science, I can tell you this. But it's get better. How does it get better? What if there's a way to even know when? You know the what, I mean, you see the direction, you know where to enter a position, you know also where to exit if you're wrong, you also know where to take profit, because you can project forward the pricing, right? Now imagine if you can tell when. How much is this worth to you? I only have one word. It's priceless. That means to say the market cannot surprise you. If you can trade the way, a very logical way, a very sensible way, the market can never catch you with your pants down, because there is no way the market can do a move that you have not already anticipated. How would you like to do that? Now, I'm going to share with you a very simple 4-step framework. All I need you to do is to do very simple work. All you need to do is do exactly what I do. Okay? First, I will talk to you about what is myth, what is reality. Let me just say that this is a no bullshit kind of a course. It doesn't take too long. I can do it all with you in one day. Obviously, you need to practice, and I'll tell you the difference between fundamental, technical, what works and what don't work. I started off my career doing technical analysis. That was 36 years ago. If those things still work today, then a lot of us will be very rich, because we are all reading from the same book. And I'll tell you the honest truth, bank traders don't even use technical analysis. And are you good enough to do fundamental analysis? Even I can do fundamental analysis. So the only thing that I depend on is price. Price is the only thing I trust. If I don't see it, I can't see it, that means it's not there. The other thing is pattern recognition. This falls back to the idea that human beings don't change. So the price pattern that we see in the past is likely to also work in the future. So pattern recognition, it is where my trigger is. If I see the pattern, once I see it, it trigger, I must go in. Now, obviously, I will talk about hardware and what the tools of the trade that you need. Can you work off a simple laptop, or can you work off from a mobile phone? I mean, if you are out and about, you have no choice, of course, mobile phone will work. But don't do your analysis on that little small screen, because you need a much bigger real estate. Okay, the bigger the screen, the more things you can see, right? And then there are people who use multiple screens. I applaud you, because you do take this very seriously. It is a business. Trading platform. You need to have a reliable trading platform. There are so many out there. You have MT4, MT5, you have Ninja Trader, you have TT, you have C Trader. You have so many different kind of platforms. And some of them are proprietary, like Saxo, for example, like Poem. Those are proprietary. So every platform will basically do the same thing. It must be able to allow you to do simple charting and make sure the pricing is reliable. It means to say that you don't get bump codes inside your pricing. So all these are very important consideration. Of course, internet connection. We are lucky we are staying in Singapore. Malaysia, not too bad. But if I do not know now, previously when I was visiting Jakarta, I had a problem because the internet connection can be pretty poor. So maybe over the years, it has improved a lot. But Singapore has one of the highest internet penetration, and our internet is so stable and the speed is so high. And we are very lucky because we have one of the best internet connection anywhere in the world. So internet connection is very important. If you have to trade, ideally trade with a landline so that it's stable. Wireless is if you have no choice. Then of course your environment in which you trade, it got to be at least quiet. It got to be at least allow you to focus. That's why I said working for home, it's not necessarily the best choice. Imagine if you work inside your house and then your kids running around, or your wife asking you to go and buy cheng, go and buy, cooking oil. Then it's very disruptive, right? So basically, you want to have an environment whereby you can actually clear your head from other disturbances and stay focused. This 4-step framework is exactly what I just shown you. Know what is a dominant and counter trend. Know where to enter a trade when you see the signal, pull the trigger. Know which are the levels in which a market can retrace to, and know where are the best buy and sell zone, where your risk reward ratio is superior. And then when the signal comes, validate it, and if it's valid, go in. Of course, at the end of the day, you want to be able to control that risk. Knowing where the stop loss point is, obviously, is going to be important to you, because if you do not know what's the worst case scenario, you will be like a yo-yo. Even if you are wrong, you do not dare to go up because you think maybe the market will come back again. And the market comes back, you think maybe I can make money out of it. So it will be forever unending. So know that stop loss level and place it. Then of course, the last part is profit taking. Where to project the price forward into the future. When the price comes to those levels, take your profit. That's the end of the trading game. It's very simple. Then again, I will also show you how to use multiple time frames. You know, for one product, you need to be able to see the monthly, the weekly, the daily, the 4 hour, the 1 hour, even down to the 1 minute. So how are you going to have enough space on your screen to see everything? But you need that. The lower time frame is for you to fine tune the entry. The higher time frame is to see the big picture. So everything must come into sync. It must come together. And when everything comes together, you have a trade. If you can't see anything, that's okay. You don't have to trade every single day. Remember, your idea of trading is to make money. It's not to trade. The trade is only the act. You are trading to make money. And there is nothing, if you cannot see anything worth doing, it's okay not to do anything. Somebody used to say, the biggest money you can ever make, the most money you can ever make is by sitting still. It means don't do anything. If you're in position, don't be itchy, go and tweet that. If you already analyze, you already know this is your maximum risk, this is your maximum profit, go with it. Ideally, don't tweak too much if you already have a plan. The worst thing you can do is have no plan and then go in, and then it's like, how are you going to go to battle, you know, not wearing all your gears? You have to do that. Huh? So decide on that. Now, then I will also teach you a little bit about practical things, how to allocate times, how much capital do you need, and what kind of time frame should you be trading. Again, this will be based on your personality. The method can be the same, but because you and me are different, you may be somebody who is easily excitable. It means to say that you cannot sit still for too long. Then you always need constant action. Then you will have to tweak the system to suit your personality. And for those who are very risk averse, before they enter a trade, they will think, make sure everything comes together, and then it's sitting. Then there are those kind of people with that kind of personality. Then you obviously will have a different approach. But the basic approach is the same. You just have to fine tune it and make it your own. Then again, how to identify the setup. Once the setup is there, record it down. Before you do the trade, record it down. After the trade, record it down so that it can act as a lesson. Whether the trade end up to be profitable or not, you can always go back and say, oh, when I make the decision, why do I make it? And after I make the decision, did I change it halfway? And if I change it, is there a valid reason why I changed my plan? The worst thing that can happen is keep on changing the plan after you have engaged the market. That means to say you still cannot escape the emotional roller coaster. The whole idea of having a structured approach so that you don't have to go through the emotional roller coaster. Now, this course is a one-day course. I'm not going to say, okay, you pay this, I'll give you this discount, I'll give you that. It's going to be very simple. If you want to learn what I want to share with you, the price is 1189. That's it, no more. I'm not going to give you a lot of, you do this, I give you this, you know, you get so much value. This is all I'm going to give you. Very plain forward, plain kind of pricing. If you are interested, I will spend one entire day with you on the 14th of August. Just like this, over Zoom, then I will show you exactly how to do this. Remember, trading do not need to be complicated. Keep it simple, keep it stupid. It has worked for me. I'm sure it will also work for you because I am no rocket scientist and I am definitely not a mathematical genius. So what I can do, if you can work a calculator, you can learn this. This is how I would think it is. Now, if you sign up today, I'm going to give you a book. I also published a book last year because locked up in Singapore, right? Can't go anywhere. So I myself finished a project. I always wanted to write a book. My wife had been pestering me to write a book for years. I said, I'm too busy. But last year, I got no excuse. I'm stuck at home with her. So finally, I sit down and finally finish and publish it. So this book is available on Kinokuniya if you want to buy it. However, if you sign up for this course, I not only give you the book, I will autograph it. Remember, I'm already 61 years old. If one day I'm no longer around, this book will be worth more. On top of that, you can have access to my blog. In my blog, I will post my trading ideas. Now, this blog is already available to everybody who wants to sign up. It's only $50 US per month. That means you can access what I think. These are not trade ideas that I do on the fly. It means to say I don't do buy now, sell later within minutes or seconds. It means this position I want to hold on. So these are my longer term swing trade. So I will post my trade into this blog, and I cover everything from currencies to stock index to commodities to precious metals to cryptocurrencies. So anything that I see something worth doing, I will put up an idea. If the order gets filled, I will also indicate the order is filled. If I get stopped up, I will also indicate I get stopped up. If I take a profit, I will also indicate I take a profit. So everything is recorded. So that comes along for 3 months. You get free access. But let's say if you only want to see my blog for trade ideas, I'm not saying that you should follow me. These are my ideas. You can use it as a comparison to augment your own analysis. So you get that for free as well. So a book. Now this book does not come with postage. I'm really giving you the book for free. Please, depending where you are. If you are staying very far away, let's say in another country, I can't afford to pay for your postage. So I will bill you for the postage if you don't mind. So there you have it. Now, this is something that I don't do very often. It all depends on the response. The fact is that right now we are all not going anywhere, right? I mean, we are still in the middle of HA2, heightened alert 2. Not sure what it means, but at the end of the day, we are still not able to go out and move around. I can't go out to meet you, for example. We can't have a coffee together. I would love to have that, because like I said, I need that social interaction. So until we can do that, this is the only thing we can do. So might as well pick up some skill while I still able to. Because like I said, I do not have a lot of 10 years left. I want to leave something behind, and this is one way for me to at least pass on what I know for the last 36 years.